Sorry, I just wanted to get Anna to answer that question. Apologies. Just staying with Anna's screen for a moment. What's interesting right now is, yeah, you can stay on that one. You've got the volatility coming in, you've got the volatility trigger. So we're expecting a little bit further congestion, either reversal or to stay within inside the range of that particular candle. It's now 1 minute past 8, so we're obviously starting to see a pickup in volume. And what's also helping, and it's a key part of trading, is really staying with the trend. How it's managing the emotion of once you've got a profitable position in a trade, then it's a question of staying with it and trying to maximize the potential. And this is just a classic example. We are in the crossover period, so we've got to be a little bit careful. But we go back to here, this is 7 o'clock, so this is Europe opening up. We're now through to 8 o'clock, London just getting underway. Throughout this phase of price action, Anna's got the trend dots on here. They've just rolled here, they've just transitioned, they've gone from blue, they've gone into gray. As we go into that congestion phase, and now they're coming out into blue again. But the trend monitor here has stayed exactly the same. It hasn't transitioned. So it is the power of using the two indicators together. The trend dots will always change first. They'll always transition into those phases of color where a trend is perhaps slowing down or maybe even reversing. And what it does is it moves into this gray color here. So this is a transitional, we're now in congestion. But what the trend monitor does is takes I always term it a more considered view. It's looking at a slightly longer time frame for the trend and trying to establish whether that trend has truly changed in sentiment. In other words, gone from a bullish sentiment in this case, slowing into congestion, and then a reversal into a bearish trend, or is it simply a pause point? And the reason they work so well together is these will always change first, the trend dots, but the trend monitor will change in a much more deliberate way. And you can also adjust the sensitivity on it. You can actually slow it down or speed it up depending on your preferences in terms of whether you want to see more extensive congestion phase or a less congestion phase. You can speed it up, slow it down in terms of sensitivity. Below that, we've got the tick speedometer. And what the tick speedometer does is it also gives you a heads up to participation, to activity. It's really confirming. You're obviously seeing the volume rise as we get into London. We've got an increase in volume. But what it also does is it highlights in these color combinations of either green, orange, or red. Green is where we've got a lot of participation, a lot of activity. Orange is where we're running at, let's call it the anticipated, expected levels for that particular time frame and period of the day. And the red is where we go into a sluggish phase where volumes will fall away, price action will tend to narrow. It'll typically appear in congestion phases, and then you'll see the pickup in volume and activity as we move away from these regions. And what we're seeing right now is exactly what we expect to see, is a reversal into this congestion. This may well develop further into a true reversal in trend. In other words, from what we've seen so far, a bullish trend into a bearish trend. In other words, from primary to primary, or we're going to see congestion. But at the very least, we expect to see congestion. And as I've said many, many times before, if you're in a position, if you got into this trade early, you've sat through this, you've seen this come, maybe it's time to either close out completely or to take some of your position off the table and just wait and be patient. Because if the market continues higher, jumping back in here, you know, you've lost a little bit of the spread down here, but so what? Would you rather sit through congestion, or would you rather take your profit off the table, wait, and then jump back in? The cost of trading is so low. It's a question of you've got to make that decision. If you're trading in multiple lots, in other words, you're scaling out as a technique, and you've got several contracts on, then you can take some off, leave some to run. You've banked some profits, so you're quite happy, and you've still got a position in the market. So there's lots of different ways to cut and slice and dice it. But that's where we are at the moment. We're seeing that congestion, that pullback, and it's all to do with the fact that we've now gone through the London Open. Yeah, let me just switch off for a minute.
And can I just also, if you look back over here to the extent of the congestion phase over here, it's a lovely example of Wyckoff's second law of cause and effect. This is only, as I said, this is the 3-minute chart, so where everything is relative. We had this long phase of congestion at roughly here where we are at 81.70. We've got at the volume point of control, we've also got a strong resistance support level, resistance coming up, obviously, and support becomes support once the price moves away. So having seen the depth of the length and of the congestion phase, we know everything breaks out at some point. The second law says, well, you know, the stronger that is, when it does break away, the further the price is likely to go. And if you look at actually what we're talking about here, we're talking at 81.70, we're up 82.80. This is 100 pips. This is on the 3-minute chart. This is 100 pips since 7 o'clock this morning. This is, you know, I remember speaking to a trader many years ago who was absolutely adamant that you did not get trends in the faster time frames. And I think, well, you know, how much you had to go to, you had to talk, could only be on the dailies and the slower time frames, and clearly it's an absurd comment to make. They don't, you know, they're not going to say they appear necessarily every day. You do have to be a little bit patient, and certainly this particular pair has a habit of it will be can be in a consolidation phase for a reasonable amount of time. But boy, oh boy, when it does move, it really does. It can actually, you know, take off and deliver these very, very, very strong moves. And we're looking now again, as David said, we've got this back into the volatility candle here. We've had this congestion, there's a lot of volume going in. What do we wait for now? Well, we have to wait. If you've missed all this now, really have to wait until it moves out of this congestion phase, and if it's going to carry on higher, or is this a prelude to an actual reversal? You know, it's again, patience is the is the key here, and obviously looking at what is happening on multiple time frames. What have I got here? In fact, I've got it here. I've stripped it right back to, this is on the 60-minute chart. Again, what this tells me is where I think this, if it's going to carry on higher, where is it going to? And actually, for actual entries, let's just go back to, I've got it on the renko here as well, it's simply, you just have to wait. This all I can say. You're never going to be in a position to, you know, catch everything that happens in the market. If you're like us, you're not focused on maybe 3 or 4 pairs. You know, you're just looking for trading opportunities. You have to make a decision. So right, I'm going to go with this one, but you know, it might not play out, and you look back, you think, oh, I wish I'd gone and looked to that one over there. You're always going to get that. The other option is to say, right, I'm actually going to focus on a particular currency, a particular set of currency pairs, because they fit in with the time zone that I trade. And you have to also remember, this has got the pound in this pair. So obviously the British pound is going to be very much to the fore in the London in the London session. You know, it's the local currency, as it were. And so then you have to say, okay, I'm only going to be focused on maybe 4 or 5 pairs. I'm really going to get to know them. I'm going to get to know everything about them in terms of fundamentals, central banks, etc., etc. And I've got a really great example later on the euro yen on that one. There's been some fantastic price action on there, and it really brought together the technical picture, VPA, and also the fundamental news. So I want to but that's for later in the session. But even then, you know, you could be in a situation where 4 or 5 of your little portfolio of pairs, you could go maybe some few days and nothing really seems to happen, and you look over at the remainder of the pairs and you think, oh, I wish I'd been in there. I wish I'd been in there. Please don't get into that frame of mind. The market is what it is. There's always something to trade. You know, just sort out in your own mind what you feel more comfortable with. Do you feel? Just, you know, you've got your 28, you're looking for a setup, you're looking for something to trade, fine. Sort out the time frames that you're happy with, sort out the combination of time frames that you want to use. How long are you happy staying in a trade for? Because a lot of traders like to trade the faster time frames. There's a financial reason for it, because their accounts aren't very big, but also there's also the emotional aspect of this. If you know, are you comfortable sitting through you know, could be quite volatile price action, or do you just simply want to get in and get out as quickly as possible? That's fine. It's right. I'll pass over to you now. Is that okay?